Welcome back. We are now hearing from Tom Lee, the chairman of the board at BitMine, an Ethereum treasury company, that major stakeholders and mega investors are now piling into Ethereum and these Ethereum strategy companies, which brings us to where we are in the cycle. Where are we? Are we going higher? Are we going lower? A lot of people think we're down here at the beginning of the bull run, but I believe that we are towards the middle, entering the end stages of the bull run. And what happens after the end stages or at the end stages? Massive drop. And you guys have to keep in mind that the Bitcoin price has been going effectively straight up since the cycle low in June of 2022. And we are coming up on that 4-year cycle coming to an end, right? 4 years in, 4 years out. And so what does that mean for the Bitcoin price? And what does that mean for the risk in the market? Because there is a lot of geoeconomic, global impacts that could potentially, make the market drop by potentially 70 to 80 or 90%. And in today's video, what we're going to be doing is we're going to be exploring the Ethereum strategy companies, what they're doing, how this is going to impact what the MicroStrategies of the world are doing, and how these are potentially going to take down the market and bring us into this accelerated drawdown in the market. But first, we have to understand what's going on in the general economy. And this is where Trump says that economic growth shatters expectations. But is that what people are actually seeing and feeling in the general economy? Well, let's kind of get into it and discuss all of this right here on the channel. Make sure you guys are subscribed to the channel. We upload every single day to bring you the latest happening in the financial world. Also, consider becoming a channel member by clicking the join button or subscribe plus button down below. And remember, thumbs up are free, crypto is not, and thumbs up let me and YouTube know that you enjoy this kind of content. So let's get into today's video. So in my view, crypto is at risk, right? We are, based on the psychological chart of the markets, either in or past the euphoria phase. And the euphoria phase is it, right? And even if we're at the euphoria phase, these mega jumps happen very, very short. They're short-lived, meaning they don't happen and stay elevated forever. And when we actually look at the chart, right, look at this upward move. This is over the course of multiple years, and you can clearly see this on the Bitcoin chart from the cycle low of 2022. Now, Trump is saying that economic growth is shattering expectations, but data is saying otherwise. And so we've heard about the job numbers, being revised down from previous months. We've heard about all the economy and the tariffs and the unemployment, all kind of becoming questions of where we are in the actual overall economy. Now, let's be real. The government is never going to say that we have a bad economy, and the president's never going to say that either. I mean, in the previous administration, we had multiple quarters of negative GDP growth, which is the technical definition of a recession. And they were trying to redefine what a recession definition is, because they were like, oh, no, two quarters in the negative is not a recession. There's a lot of other factors. And it's like, well, so what's the definition of recession? Well, it's very complex. It's like, that's not a definition, right? So it's a lot of financial gibberish, as we say, and we're going to be getting a lot more into financial gibberish a little bit later in this video when we're talking about MicroStrategy, because this is a risk that people are not looking at. We are also seeing now the IPO craze. And as I said at the beginning of this year, when these IPOs start to accelerate, top signal. Peter Thiel-backed crypto platform called Bullish has now filed their IPO and aims to raise $629 million. They're going to sell about 20 million shares at a price of $28 to $31, according to their prospectus. And again, this is value extraction from the market, right? When the market is paying, whether just by prices going up or companies are making a lot of money and giving good dividends, whatever the situation is, people feel really good, and people and these companies, they see this short window of time. As I've said previously on this channel numerous times, there is no coincidence that as the prices start to move up, you start to hear announcement after announcement. XRP is doing this, Binance is doing this, Solana is doing this, Tron is doing this. And the reason that these centralized teams do that is because they want to capture the upside. And you don't get the upside on many days. So when you are getting upside, meaning like massive jumps in the price, they add announcements, they add product launches, product features, celebrity endorsements, and other things like that during those moves to the upside to accelerate, to add more rocket fuel and push the market higher. But all this does is disconnects the market from the real valuation of the company or the crypto or whatever it is, and starts to put us in a parabolic zone. This is literally how we get into euphoria. Start to move higher, people are bullish about it, you hear announcement, higher. Another announcement, higher. More bullishness, higher. But meanwhile, what happens right after that disconnect move to the upside, banana zone as some people call it? Immediate reversal. And typically the reversal goes lower than where you were before the major jump to the upside. So the upside has an equal and opposite downside reaction after that. And then the market is trying to get the correct pricing in. But then what happens is, as all of the liquidity is available, right? Because the prices are higher, the market is exuberant, the market is euphoric. Then the smart money, I can't even say big money because we don't necessarily even know that all of it is big money, but the smart money, the traders, the speculators will start selling. And not only will the speculators start selling, but then you hear about IPOs and raising money and doing convertible debt like MicroStrategy is doing to raise more money. This is the liquidity drain of the market, and they will drain it until there's no liquidity left. This is where you as an investor or a trader in the markets have to capture that upside, because these companies are going to capture it. They're raising money, a lot of money. Nobody even knows what bullish is or what they're going to do. And are you really bullish on this company? To be honest, probably not, because we are at the end stages. They're just doing this to capture that upside. That is exactly what is going on here. And we see it across the board. CFTC is now going to allow listed spot crypto trading on registered exchanges. So more money coming in, more liquidity in these markets. The CFTC said that it would allow trading of spot crypto asset contracts that are listed on a futures exchange registered under the CFTC regulator. The CFTC, which regulates the U.S. derivative market, will enable immediate trading of digital assets at the federal level in coordination with the SEC, according to the Project Crypto that we've just been talking about more recently. And that brings us to what's going on with the Ethereum treasury companies. Because again, the Bitcoin treasury companies are still active, and we're going to talk about them in a minute. But now the focus is moving towards the Ethereum treasury companies. And one thing I find very fascinating about this is, at this point in the cycle, okay, second half of 2025, I think that because of all of the Bitcoin treasury companies that we've seen and all the inflows and money they've been able to raise, I think the same thing is going to happen with the Ethereum strategy companies. It has become explicitly clear, I think, to many people on this channel, that Wall Street doesn't care about the underlying product. They care about the derivative. The derivative derives the price from the underlying asset. At least that's supposed to be the way that it works. But what has occurred is these companies, which are the derivative, these are the companies that have been purchasing Ethereum, for example. These companies are the derivative of Ethereum. There's protection in these companies, at least somewhat protection, right? There's transparency, there's disclosures, there's people to hold accountable, and legal compliance, regulatory oversight, things like that. So to larger scale investors, these are safer bets than just Ethereum, because obviously you're buying the derivative, which is deriving the value from Ethereum. So they're like, there's no difference, right? And they've been trying to do this for years. And the Bitcoin and crypto ecosystem have said, you have to own the underlying asset. All of these other things are just derivatives. They're not the real thing, which is true. But now what is Wall Street, what are the Bitcoin maximalists and Ethereum maximalists doing? They're like drooling over Tom Lee and drooling over Michael Saylor. I mean, I'm pretty sure there's Bitcoin bros here who literally want to marry Michael Saylor. Michael Saylor is single. They want to marry him just because he's buying all the Bitcoin, he's making us rich. And it's like, is he really making you rich? Or he's making his company very wealthy by extracting all this value from the market. And instead of those people buying Bitcoin direct and not getting into the derivatives, they're buying in the derivative. And the derivatives, MicroStrategies, BitMine, SharpLink, these are becoming more volatile from a price perspective and a valuation perspective than the underlying asset. And so we're seeing the disconnect, right? Michael Saylor buying all of this Bitcoin and raising debt to buy the Bitcoin. It should be pushing the price much, much higher. And it would if he was not, if it wasn't a derivative. And so in my view, again, if you look at the traditional financial markets, the stock market, most of the derivatives dictate the price of the market. For instance, the price of, let's say, I don't know, NVIDIA, right? This is the largest company in the history of the planet, over $4 trillion in market cap. Are they really, like, what makes them worth that much, right? More than the entire crypto market put together in terms of market cap. There's nothing underlying, but people want NVIDIA. They want futures on NVIDIA. So what happens is the derivative, which is the futures on the stock, if the futures start to show interest in the short side, the market freaks out and then it sells off. And so the derivative actually dictate the price of the underlying asset. And that's exactly what we're seeing. Tom Lee's company keeps buying Ethereum. SharpLink buying Ethereum. All these other Ethereum strategy companies are buying Ethereum, and the Ethereum price is barely moving. Part of the reason is because they're doing this through private sales. But the other reason is because all the value growth is happening in the stocks, not in the crypto. People are buying the stocks. They're not buying Ethereum. The companies are buying Ethereum, but they're doing this through private sales. So let's listen to what Tom Lee says here, because now he's talking about larger stakeholders like Cathie Wood, Bill Miller, and Stanley Druckenmiller, even doing the same thing. They're not buying the crypto direct. They're buying these companies, the picks and shovels. It's a very interesting aspect to this cycle, because while everybody's waiting for altcoin season, I think this cycle's altcoin season is these Bitcoin and Ethereum treasury companies, because they've done the best performance compared to the altcoins. Many altcoins haven't even reached their all-time record high. Meanwhile, SharpLink, they announced that they're going to be buying Ethereum, 10x. BitMine, 10x. BitDigital, a little bit of roughness there, but they went from Bitcoin mining to Ethereum strategy. This is big. And so listen to what Tom Lee says about where the big money is going. They're not buying Ethereum. They're buying BitMine. Let's listen in.
Fair to say that since it's a dual mandate, that maybe the Fed should have been able to think that there was more risk to a slowdown.
By the way, they're going to be talking about general economy in these clips as well, but let's listen in.
That you got cut, so they couldn't. Maybe they had to err that way just for political reasons.
Yeah, I think the Fed needs to demonstrate independence, but you're right. I think when they look at their dual mandate, they're probably drifting further from the employment metric now, because the unemployment rate, if you use the existing participation rate before this report, it's almost 5% now. So the Fed now has to be considering the risk of jobs market actually going into a cycle of weakening.
Right, but you have also been, I guess dovish is the word, on inflation. You have not thought that there was going to be necessarily a big impact from the tariff regime.
That's right. And I think the biggest takeaway is, first of all, if you look at the inflation report, the goods component that are tariff driven, it's been only mild. But also, if you use the same inflation measure Europe uses, which is inflation ex housing, we're actually under 2%. The Fed, if they were the ECB, would be cutting right now.
That's interesting. So by the end of the year, or what target are you using now, and what time frame?
I think we're just a month ago, I was on the show to announce I was becoming chairman. And at the time, the stock was $4.50, and we announced a $250 million investment led by Founders Fund and Mosaics and others. But today, we announced that we reached almost $3 billion worth of ETH. And
the largest ETH holder, then.
Yeah, the largest ETH treasury in the world, and the third largest crypto treasury in the world.
$3 billion.
And we also announced that Bill Miller III made a major investment last week into Bitmine. So he joins Kathy Woods in investing in our company in the past couple weeks.
That's the Bill Miller from like Mason we all know.
Yes,
Right?
that's right. The Bill Miller
stock
that we
guy.
all know.
Yep.
Yes.
He was super early.
Yeah.
Oh, crypto too.
No, that's what I was saying. Super. He was like, right? What was he getting Bitcoin at? 2012, 13?
Yeah, he has some of the lowest cost Bitcoin out there.
And so think about this, right? These wealthy investors who've been holding Bitcoin, Ethereum for many years, they're now buying these companies. They're not buying the underlying asset. And so we are starting to see a disconnect from what the maximalists have said and preached for years and what the market is actually doing, including these maximalists. And I think it really comes down to the safety of like people are sick and tired of just transferring a coin and they have to check the address 50 million times. They may send it to the wrong address, the wrong network, this and that. People are sick of that. People are sick of the scams and the hacks and the thefts from crypto exchanges. They're sick of it. And so these big, mega wealthy investors, like it's always been ridiculous for the Bitcoin maximalists to say, oh yeah, everybody should self-custody. Like you're talking about somebody who has $1 billion worth of crypto. You want them to just put it in a Ledger Nano in their pocket and walk around with it? That's completely absurd and ridiculous. These rich people, they don't want to deal with it. They just want to know they have the money and it's safe. That's why banks have worked out for, forever. But now we're seeing the conversion of these Bitcoin and crypto ecosystem from just a product that is not safe, that could get stolen, could get hacked, could get transferred very easily. And they're putting it in these corporate, high-level, high-security custody providers like Coinbase, Gemini, Kraken, Binance, etc. And that to them is they don't have to worry about it. They can sleep easy at night. And I think this is part of the reason that we're seeing the Bitcoin maximalists doing this too. But again, what are we seeing in the cycle? We're seeing people in the cycle not even realizing where we are in the cycle, right? This is Altcoin Gordon saying, where do you think we are in the cycle? And he posted the chart of Bitcoin showing that we're only in the optimism phase. But if you really zoom out on the Bitcoin halving chart, you can see that days since the halving, which basically show you the historical context. This is previous cycle, this is the cycle before that, and this is the first cycle. The bottom is where we are. We are within 75 days from when we saw the peaks in the previous two cycles, from days since the halving. And so where are we in the cycle? We are already at the euphoria or in the complacency phase. We are right there at the top of the market. And the top of the market can hit in one day. It could hit in 3 hours, and then we can start coming down immediately. And so what do we need to be looking at? We need to be looking at the risk factors. We need to be looking at, when Wall Street is going to be slowing down. Maybe they won't slow down. But is it really a purchase if, let's say Anthony Pompliano is selling his Bitcoin to the company and they're just transferring the wallets? It's not actually an on order book sale or purchase. Udi Werthemer, who's a well-known Bitcoin maximalist, he said, it shall now be the duty of every Bitcoiner to shill MicroStrategy's stretch as hard as they can to everyone they know. Satoshi calls upon you to get everyone to sell their dollars for stretch. We must shill stretch like there's no tomorrow, and our reward will be Michael Saylor using the proceeds to buy Bitcoin. So we're literally at the point in the cycle where the Bitcoin maximalists are begging people and telling them to go buy the debt products of MicroStrategy so that you can then go and get MicroStrategy, more Bitcoin, and their share price is trading at a premium. Guys, I don't know how anybody cannot see the risk here with MicroStrategy. And that's why we talk about it so much on this channel, because I do think that this is the risk. And maybe not the risk to the whole market, right? But definitely a risk to a lot of investors who are investing in all of these debt products in the bull market at all-time record highs when MicroStrategy's price is almost 2 times the value of their underlying assets. And by the way, their underlying assets are not even the shareholders to own, because if the company did go bankrupt, These preferred debt holders get their money back before MicroStrategy holders. So every product they create that they call an iPhone moment, because Michael Saylor supposedly called Stretch their iPhone moment, which is just a debt product. The idea we're never going to have a bear market again or a corrective phase, and that all of these debt products are just going to keep performing and paying. And by the way, they all have dividends attached to them, which MicroStrategy has to pay, but MicroStrategy doesn't really make any money. So how are they going to pay it? By taking out more debt. What is that called? It starts with a P, ends with an ONZ. Anyway, so this is Jim Chanos, who we know he's not a bear, right? But he is a bear to the financial gibberish that MicroStrategy is spewing to everybody, and people are believing it. He said, for all you MicroStrategy fans talking about Saylor's guidance after the second quarter about not selling equity below 2.5 MNAV, consider this from early June. Despite not being enthusiastic about selling stock below 2x MNAV, he sold almost $1.6 billion in stock at an average 1.9x from June 30th to July 21. So the month before, MicroStrategy announced that they're not going to sell any more shares unless the MNAV is over 2.5. They were doing it. So they did it, and then they're like, okay, we're not going to do that anymore. Okay, so then how are they going to raise money? How are they going to pay the dividends? Because you got Stride here, which is $1 billion, and it has a dividend 10%. You have Stark, which is $1.3 billion and has 8% dividend. You have Stretch, which has a 9% dividend, and it's $2.7 billion. And you have Strife, which is $1.2 billion and a 10% dividend. So just on this product alone, they have to pay $125 million a year in dividends. This stock right here, Stretch, has to pay basically around $200 to $250 million a year. Strike has to pay about $100 million per year in dividends. Stride needs to pay about $100 million a year in dividends. That's a lot of dividends to be paying. How are they going to pay it? And how are they going to pay it in a bear market? That's a good question. And by the way, this idea that other Bitcoin companies are going to, other companies are going to start a Bitcoin treasury. While we have seen some start, if you strip out all of the Bitcoin maximalists like 21 Capital, which is Jack Mahler's company, you take out Marathon Digital, which is a Bitcoin mining company, Riot Platforms, Bitcoin mining company. There's really only like 3 or 4 companies that started buying Bitcoin, and it's not that much, to be honest. And so this idea, this theory, this thesis that other companies are going to do exactly what Michael Saylor has done has just not been true. It is just not true, because we are now at the end stages of the cycle. And there's pretty much no companies outside of Bitcoin maxi companies that have done this. None of them have done it. And in fact, the Bitcoin maximalists like Anthony Pompliano are starting their own company like ProCap to become a Bitcoin treasury company at literal all-time record highs. I think ProCap, I don't know if they're on here yet. ProCap, it is here. They have 5,000 Bitcoin. And I'm pretty sure that their buy-in price is literally all-time record highs. Let's see if it tells us their buy price. It tells us that they bought on June 23rd and 24th. So if we go to the Bitcoin price on June 23rd and 24th, we'll be able to see $120,000, I'm pretty sure. Let's see. And by the way, don't forget to give this video an absolutely free thumbs up. So yeah, they basically bought at $110,000. Where are we? We're at 112,000. How much higher do you think we're going to go in this cycle? And so that's a Bitcoin maximalist, Anthony Pompliano, buying in his company, right? But other than these Bitcoin maximalists, nobody really is buying. Like you don't. Tesla didn't buy anymore. SpaceX didn't buy. Amazon didn't buy. Microsoft didn't buy. GameStop bought 10% of their cash holdings in Bitcoin at all-time record highs. And so Jim Chanos said Michael Saylor believes you should value his stock like other companies, but based on his own guidance, he's willing to sell you more stock at 7 to 11 times his earnings, or at a multiple well below other companies on his comp sheet, seller believes you're too unsophisticated to figure that out. But by the way, guys, I don't think that the market is that unsophisticated. And so them trying to defend this $400 price, once we came under $400 in early August, I said in my thesis that this is something to keep an eye on. Because if they are not able to reclaim $400, it's over. It's over for this cycle for MicroStrategy. Now, I'm not saying they're going to go bankrupt or anything like that. I don't know. I'm saying from a price appreciation standpoint, that's it. Because if they cannot defend $400, they cannot defend this MNAV. And if they can't defend this MNAV, that means nobody's buying the stock. And if nobody's buying the stock, maybe we're at the point in the cycle where people are like, wait a minute. Besides Udi's telling everybody to go buy Stretch and tell everybody and their mother to go buy Stretch to pump MicroStrategy, there's going to be so many people that get wrecked by this. Like, I'm talking about it, wiped out, no money left in their accounts, in extreme red. Personally, I'm hedging that because I do think it's going to occur. I think it's already underway. Because once MicroStrategy came below $400 price, it has not returned to $400. Even though Bitcoin is at all-time record highs. So Bitcoin can go to 150,000. MicroStrategy may pop, but I don't think that it's going to be able to maintain this above $400 level. And so every time we hit 400, I'm taking a further position against that. Because it has nothing to do with the strategy, has nothing to do with the Bitcoin thesis. It has to do with the stock is clearly overvalued. And then you add in all the debt that they have and all the debt that they have to pay. Oh my God, guys. This person, Fun with Numbers on X, said, if my math is correct, MicroStrategy is now up to $580 million in annual dividend payments on their preferred equity offerings, those debt products we were just talking about, using 9% for the Stretch. That's roughly $145 million per quarter, every 3 months. And by the way, MicroStrategy, they do make money because they do have a software business. I want to be very clear about that. But they don't make a lot of money. And so they have to pay out $145 million every single quarter. And by the way, most of these debt products, they have accumulating dividends. So there is this idea that in a bear market, they're not going to be able to pay the dividends, but then it will be cumulative. It'll just keep getting added up. And the company basically owes it to these shareholders. So then maybe in the next bull market, they'll pay it back. But that's a lot of money, guys, for a non-productive company that's not really making that much money. They now have committed to $145 million per quarter in perpetuity forever. And I think that this is going to be a huge issue in the bear market because they may not have a choice but to sell some of their stock, especially if they can't raise money through the debt offerings. Because why would anybody buy these debt offerings knowing that the dividend is not going to be paid, or knowing they're going to issue more of that debt to raise the money for it? In a bear market, it's not looking good at all for a bear market. Ryquant on X said, thinking of MicroStrategy in terms of MNAV is just quite simply not the move. Perhaps thinking of MicroStrategy as a business, not just a holding company trading at a premium, that is releasing a product that solves the monetary desire for half the world's assets. But here's the deal, guys. MicroStrategy is not releasing a product. And it's not this walled garden product. Like MicroStrategy is buying Bitcoin. I can buy Bitcoin. You can buy Bitcoin. Anybody in the world literally can buy Bitcoin at this point. And so MicroStrategy's product is not, it's not unique. In fact, the whole thesis of Jim Chanos is that you're paying $1, where is it? Right here, the MNAV, $1.70 for $1 valued share. This should be at $1, and it will be. There is no doubt in my mind this is going to compress back to 1.1. and probably go in the negative in the bear market, but it's going to happen. And so this is almost a guaranteed payday, almost, because you're going to have a downtrend in when Bitcoin starts downtrending, and it will, right? We've been going straight up since 2022. There is going to be a corrective phase. And when that happens, MicroStrategy price has to drop. And then this is where I think the MNAV compression will take place. So not only will the MicroStrategy price crater, but the compression of the MNAV will make it crater harder than Bitcoin. And if you're in a leveraged play here with shorting or puts or inverse ETFs, the payoff can be astronomical, truly astronomical. And that's why I bring up MicroStrategy so much, because I think that people are discounting the precipitous drop we're going to see. That same guy, Rai Kwan, said, I see no reason as to why MicroStrategy cannot continue selling preferred stock in a down market. He said, I feel like Steve Ballmer, but instead of saying developers, I'm saying preferreds. That's what the whole enchilada of this business is, sir. Basically talking to Jim Chanos. Jim Chanos said, I feel like you might have no experience with a down market. And I would agree. Because in a bull market, people, and this is, again, why I think we're in euphoria phase. They can't see the market for what it is. We are looking at this market, no emotions involved. This is strictly a business deal, right? Either we're going to make money or we're going to lose money. And we want to make money. Are we going to make money in every trade? No. But we have to be somewhat aggressive in this thesis that we want to make money in the market. Because otherwise, you get in this euphoria phase. I'm a genius. We're all going to be rich. And that's exactly what they're saying here. They're like, there's no reason Michael Saylor can't sell preferred in a down market. It's like, wait, they have to pay $145 million every 3 months in dividends. Where do you think they're getting the money for the dividends? Like, where do you think they're getting the money for it? Let's pull up their finances. And by the way, now because MicroStrategy, they have a new accounting model, they said that they made $30 billion in the last quarter or something like that, which is complete hog. They don't make any money, right? But yeah, you can see this right here. Their revenue in last quarter was $114 million, but their income was $10 billion. How does that work? I give you $100 and then you say that you now have a $10,000. It's like, what? I give you $100. You have $100. You don't have $10,000. But you could say, but Cryptoviser, I have a business and you just valued what I'm selling at $100. So if I multiply that by the multiples, yeah, I have this much. It's all financial gibberish, AKA bullshit. And so in one quarter, they made $114 million as their business, right? MicroStrategy does have a software business. The quarter before that, they made $111 million. The quarter before that, $120 million. And the quarter before that, $116 million. So in the last 4 quarters, the last 1 year, MicroStrategy in a bull market, at the top of the bull market, and the ability to raise all this money, they don't even make enough in cash flow in 1 quarter to pay the dividends. And so it's not like their revenue is increasing. The revenue is flat quarter over quarter, basically. And so the only way that MicroStrategy can pay these dividends that I can think of currently in a bull market is to sell either shares on the open market or sell more of these debt products or create another debt product. They have to raise money to do this. And so think about that. If you're going into debt to buy an asset and then you're going into debt to pay the dividend, that is the debt that was created to buy the asset. This is literally the definition of a Ponzi. Now, I'm not saying MicroStrategy is a Ponzi, but the method they're using is very similar. And so in a down market, they may not be able to raise the money, because why would any investor buy those products knowing it's not going to buy more Bitcoin or improve the company? It's just going to pay the dividend. effectively, they would be going to the same investors that they owe a dividend to and saying, give us money so we can pay you the dividend. Or they can just not pay the dividend and say that it's going to be added up, and once they start making money, but you don't know when that's going to be. So I don't know how that's going to end up, but I agree with Jim Chanos here, guys. These people, they're like, I can't see that they can't sell preferred in a down market. It's like, are you serious? Like, who is going to buy this when the market is cratering? And so Jim Chanos said, because there is a growing realization that buying Bitcoin at a material premium to the market price is not particularly a good idea. So a new narrative is needed to continue the paid promotions. And that's why we're starting to hear the MicroStrategy bulls saying intelligent leverage, infinite preferred stock, financial alchemy. As Jim Chanos calls these, it's all financial gibberish. It's all meant to woo you in, make you so focused on the actual product that you miss everything else going on in the market. And that's really what this video is about. It's about focusing on what the market is doing and what the market wants. In my view, right now, where we are in the cycle, the market doesn't want Bitcoin treasuries, right? There's no companies during this cycle, non-Bitcoin maxis, that started to accumulate Bitcoin. Not one company. Last cycle, we had Tesla. We had SpaceX. Like, there were a few companies that tested this. This cycle, pretty much no companies did it. And the companies that did, like GameStop, they only used 10% of their cash, which tells me they're not fully in on this strategy or this thesis of the Bitcoin treasuries. But then if we look at the Ethereum treasuries, these are, I would say for the most part, these are not Ethereum maximalists. Tom Lee is not an Ethereum maximalist. Maybe he owned Ethereum, but he's an analyst and an investor. Consensus, we obviously can say that Joe Lubin is an Ethereum maximalist, so we'll skip that. Bit Digital, they were a Bitcoin maximalist. They used to mine Bitcoin. They switched their whole business model to Ethereum this cycle, which means they don't believe in the Bitcoin thesis either, and that Ethereum is probably more lucrative. Because while some companies may rebrand or change their thesis and strategy, I don't know that Bit Digital, at the level that they are at, and all of the infrastructure that they had for Bitcoin mining, that they would just do this to pump their price of the stock. Because, by the way, the stock hasn't even really moved since they made the announcement. BTCS, this is another Bitcoin and generally crypto-focused infrastructure provider, and they moved into straight Ethereum as well. And so this looks like that is what Wall Street wants. Number one, Wall Street wants these derivative products of the crypto so they can trade the derivative, not the crypto itself. So there's something to say about that. But we're also seeing that these Bitcoin and Ethereum treasury companies and even Solana treasury companies, this is what Wall Street wants. And as I've explained over and over on this channel, what Wall Street wants, Wall Street gets. And so that's why these stocks are the new alt season. This is the alt season. Everybody's looking at, oh, but Cryptoviser, I've been holding Avalanche for this many years. And oh my God, Cardano just had a new coin that they launched. Why isn't it pumping? It's like nobody and Wall Street gives a shit about any of that. Nobody is able to raise money for any of these shit altcoins. Wall Street is focused on the heavyweights and putting the heavyweights and creating derivatives so that they can trade on top of trade, on top of trade, on top of trade, and not actually touch the underlying asset. Because they can look at some of the sentiment in the market and say, well, it looks like Ethereum is not going to do well. And because these are levered plays, the Bitcoin and Ethereum treasury companies, they can make more money in those trades than they can in the underlying asset. And that's why Wall Street is doing this. This is why MicroStrategy is creating stride, strike, stretch, and strife. Because the next one is better than the last one. And so they're just creating more nonsense to raise money to buy the crypto so that Wall Street can trade it. And by the way, they will, and they are. And this is why I don't think that MicroStrategy is going to be able to defend this $400 price, because we are at the end stages of the cycle. Wall Street knows we're at the end stages of the cycle. The liquidity that is being pumped out into the market is end stages of the cycle. And so where Wall Street wants is they want to capture the upside, but they also want to capture the downside. And to capture the downside, you need to create these products so you can short them, puts on them, inverse ETFs on these products. And there is a lot for MicroStrategy right now. I mean, there's 3x leverage ETFs for MicroStrategy. And in a downtrending market, those people who are betting the price goes down, I personally believe are going to make way more money than you could even imagine, holding this, holding this, holding this, holding this, holding this, and really potentially even holding the crypto itself. And so I think it's clear as anything has ever been clear before what Wall Street wants and what Wall Street is getting. And so we need to refocus our thesis away from, I want this altcoin to pump, I want this altcoin to pump, and move into which stocks are going to pump. You know, I told my viewers back in the day, by the end of this cycle, I want to be out of crypto, at least until the bear market. It's the market is telling us, yeah, that's the move, because the assets that are moving is not crypto. The assets that are moving are stocks. And so you can make money on the way down. You can, with MicroStrategy, with the Bitcoin treasury companies. You can make money on the way up with the Ethereum treasury companies. You can make money sideways by selling calls and puts on the market. There's a lot more ways to make money, and that is why Wall Street wants this. And when I got this revelation, I guess you could call it, it changed everything for the cycle and made everything make more sense. And it solidified where we are in the cycle. Because while everybody's focused on altcoins, and when is this coin going to pump? When is this coin going to pump? When is this coin going to pump? The market has already been pumping. You've just been looking in the wrong areas of the market. Instead of the cryptos, you should be looking at the stocks, the derivatives, what Wall Street is getting into. And it would all make sense. Because Wall Street, they are sucking as much money out of the markets as they can. And they're doing a very good job at it. But that is the signal that we're at the top. But nobody can see it because the altcoins haven't pumped. But they may never actually pump the way that we want them to pump until Wall Street is interested. And so all these people are going to have the rug pulled right out from under them. I think it's already underway. This doesn't mean that we can't go higher, but I think the rug is already being pulled because the MicroStrategy bulls, they can't see it. They're like, wait, what do you mean? What do you mean? It's like, guys, Wall Street has already moved away from Bitcoin. They're now solely focused on Ethereum. And you don't have to believe me. Tom Lee is telling you. How many new investors has Michael Saylor gotten? How many new companies have they gotten to buy Bitcoin? Almost none. Meanwhile, I would say Tom Lee and or Joe Lubin from Consensus, they've probably done more in terms of getting companies to think differently than Michael Saylor has done in this cycle. And maybe they're doing this because they see what Michael Saylor's doing with Bitcoin. And they're like, what he's doing is very smart. Let's do it with Ethereum. Let's do it with Solana. Let's do it with Dogecoin. Whatever else there is. But this is the signal that we are at the top. Because there's a lot of money being made already. And the people who are focusing on the coins that they're holding in their wallets that are not moving, they're missing everything else. And so those are my thoughts on it. Let me know what you guys think down below in the comments of this video. Don't forget to give the video a free thumbs up. Check out our other videos on the channel and make sure you're subscribed. That way you never miss a new video. This is the Cryptoviser podcast. We talk about crypto, blockchain, and investing every single day of the year since 2018. I'll see you guys on the next video. Crypto on.